Hey everybody, this is Jim at SP500chart.com. It's about 4:15 in the afternoon on Halloween. So let's get this video done. It gets dark kind of early, so I might have to meet some trick-or-treaters at the door. But look, we're going to take a look at what took place today in the S&P. And before we do it, I just always need to remind you that the website and this video are for educational purposes only. Nothing stated inside or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. In other words, what's good for you may not be good for somebody else. What's good for me may not be good for you. And what's good for you may not be good for, well, let's be honest, what's good for you may not really be good for you. So, because the markets are full of risk. And by the way, even though I've been doing these videos for over 3 years now, I'm still not a licensed financial professional. I'm still just a guy who draws lines on charts. So let's take a look. Okay. Wow. It sure looked around... What time was that? I don't know, probably around 2 o'clock or so. Sure looked like we might have been out of the woods here. But, boy, we really gave up a pretty quick, roughly 10 points on the S&P really quickly. Now, one thing I want to mention about this chart, for some reason, we actually closed a little lower than what this candle shows. This chart shows the S&P closed down about 5 points. In fact, it's down more than 6. And our close is about 1756.50, something like that. So we need to add just a little bit more to this, excuse me, to this last candle. Now, I mentioned that it looked like we might have been out of the woods. And the reason I say that is we look at what's been going on in the S&P for the entire time that we've been in this upward trek here, we would see trend lines get taken out, but we would only go down for a day or a day and a fraction. Today, we are down for 2 days in a row. So my little guess line right here, I'm leaving this on the chart. And you know why? Because if you watched the video yesterday, even though it's only defined by one thing, it is parallel to this resistance line. And the way we got the reaction when this line gave way, the way it's acted since still tells me that this is an important line. And I know that kind of maybe ought to have an asterisk by that statement, because you normally cannot create a trend line on one point. And that, I mean, the simple geometry of it is painfully obvious, because if we go back to this point here, we can make that line go wherever we want it to. But this is parallel to this line, and when it broke, it did seem to set up a little bit more of a cascade of selling pressure. So I'm going to leave this, and only because I think we probably need to consider this line having been flipped now to resistance. Now, as we go and we look at things on a 5-minute chart again, we closed actually not hugely down from this candle, but actually we should be about where the mouse is right here. And the reason I said that it looked like for just a little bit that maybe we were out of the woods, I say this for 2 reasons. First thing is, we did break down out of this little ascending wedge here, making this a bear flag. There was that initial move. We broke down late yesterday, back tested early today, and then came back down in a move that was about equal to the drop that formed before that flag appeared. You're saying get to the point. Okay, I'll get to the point. And there still could be a way to look at this chart and to say we may not go much lower. And let me show you what I'm talking about. If we go to this high that was reached early on the 30th at the open at 1775, which by the way met our target from our very small inverted head and shoulders pattern. But if we start back there and we snap a line and we try to get it to line up over as many little peaks as we can, we actually end up with something about like that. So I know that misses these little candles right here, but we get 1, 2, 3, 4, 5, at least 4 pretty good touches on this line. And then we got over it what we saw at the end of the day, maybe, I'm not going to lock into this, maybe a back test on this line. Now, if you're a real stickler and you want to say, well, Jim, actually these are the highs right here, well, then you would put this line here, at which point, well, not as much stuff lines up. So I'm kind of, I want to keep this on the chart, and I want to go with 1, 2, 3, 4 touches, and I want to give it just a little bit more room, just in case maybe we're making some kind of little triple dip here that could still serve as a consolidation. But I tell you what, in order for that to be true, there's no room for selling tomorrow to speak of. Really, we need to rebound pretty quickly, and it really looked like that's what the market wanted to do this afternoon when we put in that little move up to about 1768 and change. So right now, if this is not a reasonable interpretation of the chart, and this line is not a for real resistance line, then we would know that too, because we would likely just plow down through that and test our levels at least around 1748, and that could happen very easily tomorrow. So I guess what I'm saying, this is another situation where we close, by the way, very near that extended neckline from our inverted head and shoulders, a little bit underneath it, just like we were a little bit underneath it earlier in the day today. Now, as far as if we're looking for a bearish pattern, there is a possibility, and there is a possible interpretation that we could say we are forming a head and shoulders top here. And if that is the case, I would use, I think I would probably go with this as a neckline right here. So let's make that kind of a dark purple. We'll move that just a little bit so we'd have a left shoulder, a head. This would be part of the head, and this would be a right shoulder. But the fact that we're over this little line right here, it just gives me a little bit of that is potentially a bullish thing. So right now, guys, we're in the same situation that we were in yesterday, and that is if there's a line underneath us, I think you need to look upon that as providing support. If there's a line above us, then you have to look at that as a source of resistance. And where we stand today is we are much closer to some potential support lines than we are resistance lines. So that tells me we are probably in a little bit more of a position to expect a bullish outcome in the next few days than we are to expect a bearish outcome. The caveat being, we need to bounce either on one of these three lines right here, or we got to get picked up pretty quickly on this blue line that I've just highlighted here. And again, I'll remind you where that comes from. This line extends back to the highs of the middle of September, as well as the highs in very early August. So we've got this line right here, not quite horizontal, but I think maybe close enough to have flipped into support. So let's see if that indeed acts as support. Moving in one more look here. I'm going to adjust the chart just for a second and be right back with you. Okay, as we look at it now in this 15-minute view, this line I think is pretty important because if this line were to break, then what we could be seeing is a left shoulder, head, and potentially a right shoulder. We don't know yet. So this line this line needs to hold. If this doesn't hold, then I think we are probably going to be selling off a good bit more than what we've done so far. Not hugely, but to a fair extent. But in the short term, it looks like we are right near some pretty decent reasons to expect a bounce. If we get down here, that's a good reason to expect a bounce. And resistance isn't until we get to over 1780 at this point. Because, well, by midday tomorrow, we'd have to be over 1780 to hit an expected line of resistance. So, guys, that's the video for October 31st, 2013. You know, I'm not panicking here because each time we've seen a break of a rising trend line so far, we've not seen a huge amount of selling. And there's evidence that we could be in just a little bit more selling, maybe a couple, 2 or 3 days before this reverses and heads back up. But we will know for sure, and we know which lines I think we need to watch to get a clue as to what where we need to start getting concerned. And on that note, I just want to say there are times when technical analysis isn't so much predictive as it is diagnostic. And what I mean by that is sometimes you can look at the chart and you could say, you know, I really cannot tell you from the chart what to expect. And in this particular chart, I can't tell you what to expect. Now, if we had an inverted head and shoulders that had a target of 1860, and here we are at 1757, I could say, hey, expect 1860. But right now, no such thing exists. We've met our little target when we hit 1775 from this little pattern here, and right now there's no pattern that says expect something. But we have trend lines that help us to diagnose. And what I mean by that is, if we take out these 3 lines right here and we start getting into the low 1750s, then I think you can probably look at this chart and say, well, if we're going to get down to 1754, then we're going to probably follow on through and get underneath 1750 and test support at 1747. And if we break 1747, then then we've got a ways to go down. So that's what I mean where it's diagnostic. If we take out these three lines, that's kind of like, well, turn your head and cough, you might have a hernia. If we take out this line, turn your head and cough, yeah, we got a hernia. And if we keep plowing on down, and if by chance we were to take out 1700, then you would have to look at this and say, okay, we are now probably, we probably ought to be bringing in a specialist. So, pardon me for getting a little long-winded and off topic. Like I said, there's a couple reasons to expect that maybe we're going to bounce very shortly with a meaningful bounce to set a new high. But if we don't do that and we take out some of these expected levels of support, then they become diagnostic rather than predictive. I hope that makes sense. So as you kind of learn to decipher what I'm saying, see, the deal is I don't want to say this is where you buy, this is where you sell, because I don't know what your objective is. My goal is just, this is what I think the chart is shaping up as. You then need to take that and apply that or not apply it. It's your choice to what you're doing in the markets. You might look at what I do and say, you know, this stuff seems to work, but Jim, I think you missed something. If you do that, I will not be the least bit, you won't hurt my feelings. Let me put it that way. And if you share something with me and say, Jim, I think you're missing something big, please do. But you won't hurt my feelings. So guys, take care. Be careful. We're in kind of an interesting situation right now. Is this a break of that blue trend line to consolidate, move sideways, and then move back up? Or are we breaking this line to reverse? The jury is still out. Thanks for watching. Take care.